Joining us this morning, UBS Private Wealth Management Managing Director Alli McCartney. Alli, happy Friday. Good to see you.
Happy Friday. Good morning.
So 30%. I mean, it's a nice hedge against a recession call. You would be taking some off the table?
Yeah, look, I think it's time. We have, as you said, whether you call it 7 or you call it 10 stocks that have really taken the S&P up, and then you see that reflected in the numbers of the NASDAQ. We really don't think that the sort of, trite past performance is not indicative of future performance. We think that's sort of where we are with the U.S. stock market, full stop. We've had a remarkable, resilient economy. We still have the credit provision and regulatory pressure that's out there. We don't think that's come through. And the narrowness of this rally really makes it very precarious. Global tech right now is trading at about 25% over its 10-year average. Now, the 10 years that we're talking about have been an extraordinary 10 years where growth has been on fire due to the ability to take risks with really low rates. And so we think that it's probably time to take some of that off the table. It doesn't mean get rid of all tech, but it means specifically stay in tech that has more secular themes behind it, AI, big data, for example. Now, it's getting harder to parse what is AI, just like over the last 15 years, anything that was not a retail company, but a tech platform sort of touted that. But we think that it's really time to sort of capitulate a bit, because at these levels, we are pricing in, as you said, whether you call it Goldilocks, the sort of immaculate landing. So that is our advice.
Yeah, that's interesting. There's a lot of discussion, say, about the debt ceiling. And if we get a deal, what austerity looks like on the other side. We're still in QT. We know there's rate impact in the pipeline. And I guess your general view is that even though we appear to have fought it so far, eventually those things will come home to roost.
Look, they have to. Now, as much as, I had a gorgeous week getting to be with my mentor, Bill Miller, and he was talking about, the way that we sort of dissect the economy and the fact that we always like to think that the economy defines the markets, but it's really the other way around. And so when you think about that, though, you have to understand that, things take time. And we've had so many conversations about the hyperbolic, trajectory of money. And I have to tell you that whether we're talking about the public or the private markets, I and my clients are terribly active in the private venture markets. There is a story of sort of a tug of war. You're either AI or you're not right now. And, I think that we really have to be ready to see if we don't get a perfect debt ceiling, if we don't get, a perfect landing, what does that mean? Because at these kind of levels, we are definitely pricing in the U.S. sort of hitting the high note on everything. And that seems like a terribly precarious place to be, given the risks out there.